Well, it really depends, as Chair Powell has said, on the magnitude of the miss relative to their mandate. So right now, we're starting from a point where we're at their full employment mandate by almost every metric. And we're still missing, and as Powell said, we've been missing for 4 years on their inflation mandate. So, yes, in the near term, they are going to lean on the inflation mandate, hold their fire on rate cuts, and wait and see as we navigate through this tariff shock, which, very, very likely will boost inflation, at least in the near term. Even if it does turn out to be a one-time change in prices, they're going to want to verify that. Trust but verify. So that means that the labor
Right.
market has to really get a lot weaker and look quite recessionary
Okay.
before they cut rates.
Tomorrow's jobs report at 8:30. Is that going to
Yes.
deliver, quote, a lot weaker?
No, I don't expect so. I mean, we have a 115K on non-farm payrolls. That's a slowdown, but sort of a gradual one. And Tom, the complicating factor in interpreting payrolls in the next 6 months is going to be that we are implementing very drastically restrictive immigration policy. And that, in economic nerd terms, lowers the potential growth rate of the labor market and GDP. We should expect to see less hiring because there is less labor supply. That's a sort of structural feature that it's not up to the Fed to offset with stimulus. So if we choose as a nation to have fewer immigrants, then we will have less GDP growth and less non-farm payrolls. So we're going to have to really look at the unemployment rate as the arbiter of, okay, we're seeing a slowdown in hiring, but are we seeing the unemployment rate rise? And I have the unemployment rate holding at 4.2, which is still, quite low by historical standards.
Julia, looking back on yesterday's ISM data, I guess the headline was the services index dipped below 50, suggesting that maybe the services economy, again, 70% of the U.S. economy, might be contracting. But you also had some data showing, I don't know, new orders plunging, prices paid kind of surging here. And then you look at today's initial jobless claims that came in higher than expected. Are we starting to finally see in the hard data some of the uncertainty that's been unleashed by some of this tariff discussion?
Yes, I think the answer is a decisive yes to that. All of the April data came in soft. We saw a decline in core retail sales. We saw a decline in core capital goods orders. We saw a decline in auto sales in April and May. In the trade data that we got this morning, the detailed report, we are seeing confirmation that a lot of the demand we saw in Q1 was pull forward ahead of tariffs, which means that we're in for a pothole in final demand in Q2. So yeah, I think we are seeing confirmation that, number one, people did a lot of buying and spending ahead of tariffs. So, for example, one thing we got in the trade report today was a drop in technology imports. That was something that had really boosted investment in Q1. That will be a decline in Q2. So there's a little bit too much, I think, hopium built in that data centers can save the
I like that.
economy, and I don't think they can.
Just so